A very good morning to those of you who are tuning in from the Middle East, and a good afternoon to those of you tuning in from Asia. My name is Navina, and I represent Capital Markets Malaysia, or CMM. Capital Markets Malaysia is an affiliate of the Securities Commission Malaysia, and we're very pleased today to be collaborating with the Islamic Development Bank and the Islamic Corporation for the Development of the Private Sector to bring you this webinar entitled Sustainability Sukuk for Sovereign, Supranational and Agency Issuers. This webinar will last 2 hours and we'll start with welcome remarks, then followed by a keynote presentation, a few brief presentations, and followed by a panel session and then closing remarks. So to get things started, I would like to welcome Dr. Zamir Iqbal, Vice President of Finance and Chief Financial Officer of the Islamic Development Bank. Dr. Zamir, over to you.
Okay. Thank you so much. It's indeed a pleasure for me. Bismillah ar-Rahman ar-Rahim. Datuk Zainal Islan, Zainal Abidin, distinguished guests, ladies and gentlemen. Assalamu alaikum wa rahmatullahi wa barakatuhu. Indeed, it gives me a great pleasure to welcome all to this webinar on sustainability scoop for sovereign, supranational, and agency issuers. I'm also pleased to see my good old friend, Brother Zainal Islan, after a long time, and good to see that he's doing well. As we continue to live with the pandemic, I cannot think of a better time for this event to share the experience and knowledge on the sustainability issuance for all the stakeholders present today. Therefore, I'd like to congratulate the organizers from CM2 Malaysia, the Islamic Development Bank Center for Excellence in Kuala Lumpur, and ICD for putting this event together. As I mentioned earlier, that the timing of this could have not been better. If you recall, that recently World Bank, IMF concluded their annual meeting this year virtually. And one of the themes which came out of this meeting was that the recovery after the post-COVID-19 world has two very strong elements. One of it is resilience, means that the economic systems need to be much more resilient to the future shocks, as well as the recovery has to be sustainable and green. So we can already see that there is a greater emphasis on making the recovery very green. Therefore, that the timing of this event is extremely important. Now, when we talk about sustainability, the broad category of green, social, and sustainability, the GSS bonds or Sukuk, has massively changed the way investors look at investing for impact. With the global standards in place, these label instruments have enabled all kinds of issuers to demonstrate their commitment to sustainable development goals, with the market as well as the regulators taking note. Now, financing is a key component in the fight against climate change for a sustainable future. Green bonds and Sukuk targeted this segment and enabled the investors to fund climate action and clean energy to help ensure climate targets are achieved as much as possible. Now, this call to fund a green and clean future was answered by stakeholders in the best possible manner, and the result is clear for us to see, as just last month, the global green bond issuance topped $1 trillion, indeed a major milestone. Of course, sustainable development is not achieved with only green financing, but also by focusing on social aspect of SDGs. This includes the SDGs that relate to life essentials such as good health, SDG 3, quality insurance, SDG 4, and the good jobs and economic growth, SDG 8, and their respective target. As I mentioned earlier, with the new emphasis on resilience, that component of SDG will also get extra emphasis. In this context, and with the onset of the pandemic triggered by COVID 19, we have seen the increasing significance and issuance of social and sustainability bonds, under which the issuers commit to finance essential services that have been heavily impacted by the pandemic. This mainly includes access to health services and employment generation, especially in the small and medium enterprises that are a core engine of economic growth, especially for emerging market countries. The growth numbers prove how both social and sustainability bonds have been mainstreamed as part of the solution for the challenge of the pandemic that we are facing. Social bond issuance have increased 5 times year on year since 2019, and the same period sustainability bond issuance have almost doubled. With such a flurry of activity in the capital markets, the floodgates are open for Sukuk issuers to support the recovery from the pandemic with sustainability or impact Sukuk. This would also raise the profile of Sukuk as an alternative financing instrument and an asset class, and the overall Islamic finance principles that are deeply rooted in the risk sharing and boosting the real economic activity. Now, coming to us ourselves as a multilateral development bank, the Islamic Development Bank also focused its efforts on finding innovative ways to finance the recovery for our member countries and help them tackle the aftermath of pandemic. This resulted in the pioneering sustainability scoop in June earlier this year, raising $1.5 billion for emergency social projects in our member countries. Now, with respect to Malaysia, the country has, mashallah, been a pioneer in both sovereign sukuk as well as green sukuk, and is also a very trusted partner of Islamic Development Bank. I'm fully confident that Malaysia's SRI sukuk framework will enhance the global sukuk markets, and a broader range of issuers will be able to capitalize on it for the issuance of sustainability sukuk that helps to achieve the SDGs in Malaysia as well as our member countries. As you know, that Malaysia Islamic Development Bank also is a promoter of south to south cooperation and reverse linkages, and in that respect, I believe that Malaysia's leadership in sustainability financing can help other member countries or other OIC member countries to learn from it and get on a fast track with understanding the whole implementation of sustainability bonds and scoop. Now, future is still uncertain, and the global efforts to fight the pandemic have to be supported by all means. For the stakeholders in this webinar, this means to embrace the concept of sustainability scoop and promote it on all platforms. And I hope that the expert discussions in this webinar will enrich their knowledge in this regard. Once again, I thank you, everyone, and the organizers. A very successful event, and I hope to benefit from the discussions. Thank you so much. Well, Assalamu alaikum wa rahmatullah. Thank you.
Thank you very much, Dr. Zamir, for those the excellent speech. I would now like to welcome Dato' Zainal Islan Zainal Abidin, Deputy Chief Executive of Securities Commission Malaysia, to deliver his keynote presentation entitled Architecture of Malaysia's SRI Sukuk Framework. Dato' Islan, over to you.
Thank you, Navina. Let me try and share the slides. Yes. Can everyone see the slide?
Yes.
I'm trying to change. Okay, all right. Okay, thank you very much. Assalamu alaikum wa rahmatullahi wa barakatuh. Good morning and good afternoon, ladies and gentlemen. My dear friend, Dr. Zamir Iqbal, Vice President, Finance and CFO for Islamic Development Bank. Likewise, very happy to see you, Dr. Zamir. Mr. Ayman Sejini, the CEO of Islamic Cooperation for the Development of the Private Sector. Ladies and gentlemen, fellow speakers, it gives me great pleasure to welcome all of you on behalf of Capital Markets Malaysia to this webinar. This is, as mentioned by Dr. Zamir, an opportune and timely discussion on the prospects for sustainability Sukuk, given the current situation, which is more topical, as well as looking at the longer-term growth of Islamic finance. I think it has come a time where Islamic finance can play a bigger role in the global development, including the achievement of the SDGs. I'd like to also express my thanks to both the Islamic Development Bank and the ICD for joining forces with Capital Markets Malaysia for this event. I think many of you may know me as being with the Securities Commission Malaysia, but I also have a role in Capital Markets Malaysia. I chair the board of CMM, hence the dual hat that I'm wearing today. So to go into the topic, perhaps something that just to set the tone. About 2 years ago, together with Islamic Development Bank, along with the UNDP, the SC Malaysia jointly organized an event on the sidelines of the United Nations General Assembly on almost the same topic that we are going to discuss today. I think we have come quite a long way over the last 2 years, and I think it's a good time to take stock of what has been achieved and also to do some sharing during this 2-hour session. So some of these things have been sort of covered either directly or indirectly by Dr. Zamir. So I think when we talk about sustainability, I think it's difficult for us not to touch on the SDG, the UN SDG, which was actually implemented in 2015, and at the same time the Paris 2015, the COP21 on climate change. While the Paris 2015 climate change agreement is more specific and targeted towards climate change, I think it still demonstrates the importance of the agenda of sustainability, and which is also encompassed in the 17 goals of the SDG. And I think given that we are looking at the area of Sukuk specifically today, I also highlighted the fact that in 2016, which is the year after the implementation of the SDG, the OIC actually committed to the adoption of the SDGs at their 13th annual summit. Apart from sort of the obvious benefits of creating a better future where no one is left behind, there are also opportunities in pursuing this the both SDG as well as the Paris Agreement on climate change. And I think there are many, I'm sure you have seen many sort of research and study that have been done, but I'd just like to quote one, which is undertaken by the Global Commission on the Economy and Climate back in 2018, but I think it's still relevant despite the situation that we're facing currently in the pandemic, where it says that in terms of opportunities, from just taking sort of 5 areas within the SDGs, there's potential for direct economic gains of $26 trillion US and the creation of 65 million new jobs. And I think that there are other studies, as I said, which came up with different numbers looking at different segments of the 17 SDGs. And I think if we collectively put this together, we can see the real economic impact and benefit of pursuing and achieving the SDGs collectively. Having said that, there's also the issue of spending and funding, right? And we, as we know, about $5 to $7 trillion US have been identified as the requirement per annum to achieve the 17 SDGs in total. And out of this, about 3.3 to 4.5 trillion are actually the requirement when we look at the developing countries. If you look at the chart on the top right corner, I think this looks at what percentage of the GDP would be required in terms of spending to achieve the SDG targets. And these are areas sort of by region. SSA is Sub-Saharan Africa, and followed by South Asia, and then MENA, and then East Asia and Pacific, and Latin America and the Caribbean. So you can see the requirement to actually achieve the SDG can actually go up to almost 9% of GDP in some of these regions. So a substantial amount. So a lot of funding required, and this is where our discussion on Sukuk comes in. On the other side, the suppliers of capital is also, we are not short of that either. And I just pick up just one sort of barometer or indicator. By looking at the Principles for Responsible Investment, or PRI, which is aligned with the United Nations. And as you can see from the chart, the asset under management, which is reflected by the dark blue bar, has grown steadily and quite strongly. And in fact, over the last 1 year, up to end of March 2020, the growth has been 20%, up to exceed $100 trillion US, being represented by the over 3,000 signatories of the PRI. And as you can see, the numbers of signatories have also increased quite significantly and steadily over the same period. And just to get everybody sort of more or less on the same page, I've taken the liberty to just find two definitions, one for green finance and one for sustainable finance, as you can see on the slides. Green finance refers to all financing instruments, investments, and mechanisms that contribute to climate and environmental sustainability goals. And this is a definition by the Asian Development Bank. And sustainable finance talks about taking into account ESG considerations when making investment decisions, as defined by European Commission. And I think when you look at green finance, sort of the initial development or the landmark transaction in regards to Sukuk and bonds. And World Bank issued the first green bond in 2008. And the first green Sukuk was actually issued by a corporate, a private company in Malaysia that undertook the renewable energy projects in 2017. And I think in addition to this, in addition to green and sustainable finance, we also have other aspects of finance which are interrelated and quite similar in some cases, like social finance, ethical finance, social impact investing, blended finance, and the likes. But I won't go into detail for all these areas. So moving on to sort of the main area for my presentation, which is the SRI Sukuk framework, which Malaysia introduced in 2014. And this started from sort of the Capital Markets Master Plan 2 and by Securities Commission Malaysia, which look at growth with governance. And here we feel that achieving growth on its own is not ideal. It has to come with proper and good governance. And this is clearly stated in our 10-year master plan that is coincidentally expiring end of this year. And one of the sort of quote that I like to pick from our CMP2 is the social and environmental issues need to gain greater prominence in the corporate decision-making process. And with regards to governance itself, Malaysia has undertaken significant efforts in enhancing corporate governance among the PLCs as well as market intermediaries. And the latest document that we issued in 2017 on Malaysian Code on Corporate Governance emphasized the need for greater governance culture being imbued in the board as well as senior management of companies. And this led to the development of the SRI Sukuk framework, which facilitates the financing of green, social, and sustainability initiatives. And as I mentioned, in 2014, this was launched, the SRI Sukuk framework, which aims to actually facilitate the fundraising for such projects, SRI compliant projects, which in a Sharia compliant manner. And in developing the Sukuk framework, we look at a few best practices globally, and I think it is compatible, among others, with the International Capital Market Association's Green Bond Principles, and therefore can be used to finance green projects, quite similarly to the allowance under the Green Bond Principles. In order to also encourage greater issuances, as we acknowledge that SRI area is relatively nascent in Malaysia. In 2014 and even so now, there were incentives that were offered for issuers of SRI Sukuk, and this comes in the form of a tax deduction on the cost of issuing SRI Sukuk, which are either approved or lodged with the Securities Commission Malaysia. And this is a finite incentive, which for the moment will expire in 2023. At the same time, we also acknowledge that in order for a Sukuk or even a bond to be recognized as SRI compliant, in this case, the SRI Sukuk grant scheme was introduced with a total of 6 million ringgit, which is administered by Capital Markets Malaysia. And this serves to reimburse the cost of undertaking external reviews by issuers of SRI Sukuk in Malaysia. So up to a certain limit, but so far I think the issuers that we have come across that have sought reimbursement have not utilized or hit the limit that is set for individual claims. So this grant scheme is also available. And I think the next slide here you can see is sort of what are the eligible projects that can be funded under the SRI Sukuk framework. As you can see, there are three main areas. There's green, the social, and also quite specifically to Islamic finance is Waqaf. And I won't go into each of these areas. As you can see, there's quite a lot of segments or projects that fall under the green category, quite a number under social, and Waqaf reflects the development of Waqaf properties and assets. I think, and we have had issuances over, for some of these segments over the last 5 or 6 years since the inception of the Sukuk framework. For example, renewable energy actually has the more popular sort of project that has been funded under the SRI Sukuk that have been issued today. We also have issuance for green building, issuance for education under social, and very recently last week, another issuance for affordable housing. I think that the reason why we have this quite specific in terms of eligible projects is one is to provide guidance. As I said, it's a relatively nascent industry, and therefore to provide guidance to the industry, we sort of indicate some of the projects that are eligible for funding under SRI Sukuk. And secondly, equally importantly, is in order to achieve the tax or to be eligible for the tax incentive, the tax authorities would also require a specific sort of description of the projects that are eligible, and therefore, the granularity that we have that you can see on this chart is also to facilitate the tax incentive that has been accorded for issuance of SRI Sukuk. And these are some of the key components. I think largely they are sort of consistent with requirements under SRI bonds, the conventional equivalents. So utilization of proceeds solely for eligible projects under the SRI, as you can see from the previous slide. There's also a requirement imposed on the issuers to establish internal processes to evaluate and select the eligible SRI projects. And of course, they're expected to manage the proceeds in an appropriate manner, ideally in a designated account to segregate it from the other finances. And there's quite a few reporting requirements on an annual basis that are imposed on issuers of SRI Sukuk in order for information transparency to be made available to the investors and potential investors. And I think this takes me to the last slide, which is really looking forward. What are the opportunities for green, social, and sustainability, Sukuk, or GSS Sukuk for short? You can see that since the first issuance of green Sukuk in 2017, there's been a cumulative issuance of about $6.1 billion globally for green Sukuk. And there have been 4 currencies used to issue this Sukuk. The USD has been the most famous, about 2/3, and then the Euro and Malaysian Ringgit, and the 4th currency is Indonesian Rupiah. And what are the sort of indicators that suggest there is a bright prospect for green, social, and sustainability Sukuk? First is the sustained sort of high level of issuance of green bonds globally. There was about $258 billion issued in 2019, and year to date, about $189 billion of green bonds issued. So this reflects that there is actually demand for green bonds. And if we can actually expand the thinking of potential issuers as well as investors to look at green Sukuk as an alternative to green bonds, I think that there is significant potential there. Secondly, I think as we know, that from the impact of the COVID-19 pandemic, there's substantial funding required to resuscitate the economy, to undertake some social objectives of the countries. And as we can see, for example, Islamic Development Bank, Indonesia and Malaysia have actually issued COVID-related Sukuk this year to address or to raise financing to address the impact of the pandemic. So there is a continued sort of opportunity in this space as well. The third point that I'd like to highlight is the fact that last year was a record year for Sukuk issuance globally, about $158 billion, which suggests that there is continued adoption of Sharia-compliant financing in the market. So this is something which is encouraging, and to look at the different types or sub-segments of Sukuk, such as the green, social, and sustainability Sukuk, would hopefully come naturally as there are more, as demand becomes stronger in this area. And last but not least, I think a significant portion of projects that fall under green, social, and sustainability label are also Sharia compliant, and therefore I think there is again substantial opportunity for Islamic finance, in particular the Sukuk as an instrument, to play a role in not just achieving the SDG, but also in addressing some of the current issues that we are facing in the form of the pandemic. On that note, thank you very much for your attention, and I will pass this back to Navina.
Thank you very much, Dato' Islan, for that presentation. Next, I'd like to invite Tariq Malaika. Tariq is Program Lead, Sukuk and Debt Capital Markets Advisory for the Islamic Corporation for the Development of the Private Sector, to deliver a presentation on the overview of the process of green Sukuk issuances. Tariq?
Yes, good morning and good afternoon to everyone. Let me just share my screen. Can everyone see the screen?
Yes.
All right, great. So why has green Sukuk become so popular in the last couple of years? Climate change and global warming has become a major issue, not only for future generations, but for us as well. We've seen many economies and livelihoods been hit by the fluctuation in climate and its impact on their economies. As you may know, the United Nations Sustainable Development Goals and the Paris Agreement aim to strengthen the global response to climate change. That's why sustainable and green financing has become popular in the last few years, and Sukuk fits perfectly for this type of financing. So what's the difference between green, social, and sustainable Sukuk? Green Sukuk is used for environmental benefits aligned with the green bond principles. I'll talk later about the green bond principles in more detail. So basically, it looks at renewable energy projects, clean transportation, climate change adaptation, green buildings, to name a few. Social sukuk used for social benefits and aligned with the social bonds principle. So that's basically like affordable basic infrastructure, access to essential services, affordable housing, food security and sustainability food systems, and socioeconomic achievements and empowerment. And the sustainability sukuk is basically used for both environmental and social benefits, and are aligned with both the the green bond principles and the social bond principles. Is there a difference between structuring a green sukuk and the regular sukuk? The short answer is no, but the proceeds of the green sukuk is used exclusively to finance projects with an environmental benefit. So what I've noticed while discussing with issuers in the past, sometimes they think that they need certain green assets in order to structure the sukuk. So just for clarification reasons, you don't actually need green assets to structure the sukuk. However, the proceeds must be used specifically for projects that benefit the environment. So green sukuk has the same regulatory status as normal sukuk and follows the same process when it comes to issuance. In fact, there is no global standard for what is considered to be green sukuk, and the market is still, to an extent, self-regulated. This is beginning to change in some jurisdictions. Some are looking to put in place rules and regulations for such issuances. I believe in Europe, they're discussing whether or not to implement these rules and regulations. Currently, most international issuers use the International Capital Markets Association's green bond principles for their issuance. This basically promotes integrity and credibility to the issuance. It also gives investors confidence in the process. The green bond space has gained such popularity that agencies, rating agencies, financial institutions, and stock exchanges are creating indices and segments to track these instruments, which can also be used for green sukuk. So what are the green bond principles? They are a set of guidelines for issuers that promote transparency, disclosure, and reporting. These principles help issuers build their own green sukuk framework, which is shared with the investors to clarify their process in the issuance. There are four core concepts or pillars for the green bond principles. As our keynote speaker mentioned, these are similar to the ones he mentioned. The use of proceeds, obviously the use of proceeds needs to be for specific types of projects. The second is process for project evaluation and selection. This includes policies and procedures that the issuer has put in place to ensure that the projects are green. And management of the proceeds, obviously a way of tracking the funds and making sure that the funds are going to the correct projects, and reporting on the use of proceeds and on what stage the project is at. So as mentioned before, usually this is a yearly reporting which takes place to let the investors know where their funds are and how far along the project is. To promote further transparency, it is recommended that external reviews are conducted. There are four popular types of reviews. Consultant review, which gives investors a second opinion from an environmental consultant that ensures the the issuer has developed the processes for the evaluating and selecting the green project. Verification by an auditor of the green sukuk, the framework or its underlying assets. Certification, this is comparing the framework against external green assessment standards. And then scoring and rating, this is very similar to the rating agencies where they score or rate the issuance when it comes to how quote unquote green it is. So what's the role of ICD when it comes to green Sukuk issuances? As you may know, ICD has advised a few of its member countries on their Sukuk issuances. ICD has also been active in financing green and renewable projects in different member countries. So ICD's management wanted to leverage on these two skill sets to benefit member countries and help them issue in green Sukuk. Currently, we usually advise the member country or the issuer to first issue a regular Sukuk, and then after that, put in the framework to issue a green Sukuk. Unless the sole purpose of the issuer is to actually have a green Sukuk to show the investors that they are green savvy or sustainable, then we do both processes at the same time. So when it comes to the green Sukuk issuance process, ICD usually gets involved in the early stages. In some cases, we help the issuer select the green structuring advisor, and we look at the use of proceeds, and we look at where the potential proceeds might go and whether or not it is aligned with the green bond principles. We help create a framework for the issuer. Obviously, mentioned before, the 4 pillars need to be reflected in this framework. And then we help them obtain the external reviewers and prepare the documentation. Here, under a green Sukuk or sustainable Sukuk, there are some changes or some additions that need to be done to the documentation for the use of language, for the use of proceeds language, the risk factors, the disclosure of the green Sukuk framework, and highlight the green nature of the instrument. And then, as a finale, we help market the Sukuk and close the transaction. Currently, we are discussing with a few member countries as well as entities within the member countries on both Sukuk issuances and green Sukuk issuances. And we're looking forward in the next year or so to issue our first green Sukuk. Thank you very much.
Thank you, Tariq. I'd now like to introduce Dr. Yasir Gado. Dr. Yasir is Director of Treasury from the Islamic Development Bank, and he will be delivering a case study presentation on the IDB's Sustainability Sukuk.
Thank you very much, Navina, and please allow me in the beginning to provide my appreciation and gratitude to Capital Market Malaysia, the Center of Excellence in IDB in Malaysia, and ICD for organizing such a valuable webinar. And please allow me to share my screen. So, Bismillah ar-Rahman ar-Rahim. Please allow me to give you a little bit of introduction before going into the slides. We believe that Islamic finance can become a vital, innovative financing modality to fill the Sustainable Development Goals funding gap. The core principles of Islamic finance, such as channeling funding to the real economy by promoting risk sharing, avoiding excessive speculations, and limiting debt to the value of assets, and Islamic finance social tools such as zakat, sadaqah, waqf, endowments are highly aligned with the spirit of the Sustainable Development Goals. In this instance, DB is fully committed to the Sustainable Development Goals and recognize that development objectives may vary from one country to another. SDGs are an integral part of our president's 5-year plan and the bank's 10-year strategic framework. We support the implementation of this transformative agenda according to the needs and priorities of our 57 member countries through a collaborative approach and in partnership with other MDBs, social or civil society and private sector entities. So sustainability is divided into 3 major categories in ISDB, which is the green, including climate action, adaptation, mitigation, social, health, education, women and youth empowerment, SMEs, and ESG, which is again requires a strong governance and environmental social safeguards. So ISDB as the leader in the AAA Sukuk market with more than USD 33 billion of issuances to date has tapped into the green and sustainable finance arena following the establishment of its own sustainable finance framework that is compliant with the International Capital Markets Association standards and principles to serve as the foundation to issue green, social and sustainability Sukuk, the GSS. Reflecting on ISDB commitment towards sustainability, the bank has issued its maiden thematic Sukuk to finance sustainable projects and investments in member countries in November 2019, where it raised 1 billion euros, followed by a USD 1.5 billion in June 2020. The bank, as the leader in AAA Green Sukuk on the Islamic side, has been assigned a strong rating of medium green shading by an external rating agency, and the rating is similar to other MDB peers, for example, AFDB, KFW, and IFC. Again, I've seen a similar slide in Tariq's presentation, so I would actually like to highlight the distinction in ISDB with regards to the bond framework and governance. We have established a sustainable finance task force internally to do lots on the evaluation of the use of proceeds, definition of eligible assets, process for project evaluation and management of proceeds, as well as reporting. So this sustainable task force is actually, or sustainable finance task force is a very senior committee reporting such exposures to the ISDB senior management. The bank also went through a comprehensive assessment by an external risk rating provider on its environmental, social, and governance ESG credentials, and where was assigned a very strong low risk rated 11.5 out of 100, which is again available on our website should any of the participants would like to have a detailed outlook. Again, the journey was not that easy, although it's actually 3 months, but again, 3 months of comprehensive work, and it started with outlining the eligible criteria in line with the international standards and SDGs. The bank has identified a pool of eligible green and sustainable assets meeting the eligible criteria in line with the international standards, and the proceeds were used or were planned to be used to finance projects in member countries, including green transportation, health services, education, energy efficiency, SMEs, pollution and prevention and control, environmentally sustainable management of natural living resources and land use, sustainable water and water waste management, in addition to women and youth empowerment. So then the bank undergone verification by external party for independent assessment, and the process actually took about 3 months from August till October 2019. The bank has obtained the second party opinion from Cicero in Norway, and where it secured a medium green shading as per the previous slide. Also, the bank has undergone another verification by Sustainalytics for the ESG rating, where it obtained a very low risk rating comparing to other issuers in the market and in line with other entities. Moving on to our journey with the sustainability Sukuk, again, as you are all following the market, the Islamic Development Bank has introduced a strategic preparedness and response facility worth $2.3 billion to assist member countries in tackling the issues following the pandemic, and this included mobilizing resources from the global capital markets to support such interventions. So the flexibility of our sustainable finance framework enabled us to issue a sustainability sukuk without any additional work or even a physical roadshows. So we have done this transaction purely on a virtual basis. And the announcement was made in June 2020, and the deal was launched on 18th of June to issue the first ever sustainability sukuk, which is also AAA rated by the major rating agencies. ISDB was successful to raise $1.5 billion and priced at 0.908, which is a very low profit rate comparing to other issuances and with a reasonable spread above mid-swaps. The eligibility criteria included, again, access to essential services, employment generation, SME financing, and affordable housing and affordable basic infrastructure projects. So this is again the key terms of the ISDB maiden sustainability public sukuk issuance, which is again pretty much straightforward, and it is published public information. So including the rating, the issuers, the amount, the dates, the tenor, and again the use of the net proceeds, which is again clearly and specifically defined to finance new or existing eligible projects in accordance with the ISDB sustainable finance framework, as per the criteria mentioned in the previous slide. The transaction had again a very good response from the market and was managed by, as you can see, very valuable good names which we consider as partners to ISDB in the capital markets arena. The listing was in Euronext Dublin and Bursa Malaysia and Nasdaq Dubai. Finally, this is a very important quote from our President, His Excellency Dr. Bandar Khajar. And in ISDB, we believe that industry participants have an important role to promote sustainability and social debt instruments that are compliant with the Sharia law, specifically sustainability sukuk as an alternate asset class that has the potential to demonstrate the core values of Islamic finance. This asset class works both ways to eligible issuers and obligors, looking for funding, as well as for investors who are looking for safe investments in an asset-based and non-speculative instrument, providing reasonable returns in addition to a noble mission of using the proceeds to develop sustainability across the member countries in particular and across the globe in general. Coming to the end of the presentation, thank you very much for your attention. And moving back to Naveen.
Thank you very much, Dr. Yasser. I would now like to welcome Nur Masliza Sulaiman, Senior Managing Director and Head Capital Markets, Group Treasury and Markets from CIMB Investment Bank, to deliver a case study on the Government of Indonesia's sovereign green sukuk issuance. Lisa?
Thanks, Navina. Datuk Zainal Islan, Dr. Samir Iqbal, fellow speakers, ladies and gentlemen, Assalamualaikum warahmatullahi wabarakatuh, and a very good morning and afternoon to all. A very big thank you to Capital Markets Malaysia, IDB, ICD, for having me here today, and I look forward to a productive session. Today, I'd like to share with you a groundbreaking transaction in Islamic finance, the world's debut sovereign green sukuk, Republic of Indonesia's 1.25 billion inaugural green sukuk, of which CIMB was humbled to be partners with the Republic of Indonesia in 2018. This transaction was interesting, with a dual tranche offering of 5 and 10 year sukuk, where the 5-year was the green tranche. And if I may, I will take you through the deal summary and transaction highlights. Issuer is the Perusahaan Penerbit SBSN Indonesia 3. This is out of a 25 billion trust certificate issuance program, where obligor is the Republic of Indonesia. Issue ratings at pricing date were Baa3 by Moody's, BBB- by S&P, BBB by Fitch, and since then, ratings have improved, with current ratings by Moody's, S&P, and Fitch are now Baa2, BBB, and BBB respectively. As mentioned earlier, this was a dual tranche offering, and the first tranche is a US dollar 1.25 billion, a 5-year green sukuk tranche, where the second tranche is a 10-year sukuk with a size of 1.75 billion. And both tranches were issued 1st of March 2018 with an issuance format of Reg S 144A. The sukuk was structured on the Sharia principle of wakalah, with a portfolio of ijara assets which are state-owned assets, including land and building, and this constitutes about 51% of Sukuk assets, and the remaining of 49% of the Sukuk assets are in project assets, which are under construction or to be constructed. The 5-year green Sukuk tranche was priced at 3.75%, and this is a US Treasury plus 1.095%, and the 10-year Sukuk tranche was priced at 4.4%, US Treasury plus 3.75%. Here, CIMB acted as a lead book runner, lead manager, and dealer, and issuance mode was book building with listings in SGX and Nasdaq Dubai. Governing law was English with Indonesian law for asset-related documents. This successful dual Sukuk issuance is the 9th US dollar Sukuk issuance by the Republic of Indonesia. The 5-year tranche represents the world's debut sovereign green Sukuk issuance and the first ever under ROI's newly established green bond and green Sukuk framework. And this is in line with the Republic of Indonesia's ongoing objectives to strengthen the global Islamic financial market and its commitment to environmentally sustainably green financing. The Republic of Indonesia's green bond and green Sukuk framework has been awarded a medium green shading by Cicero, recognizing the steps taken by Republic of Indonesia towards realizing a long-term vision of low carbon and climate resilient future. The distribution tables at the bottom right shows robust and diverse investor participation. And this is following a series of investor meetings across key financial centers in Asia, Europe, and the Middle East. Transaction was robustly oversubscribed by a quality global order book, including a green investor base, and hence reinforced the strong investor credit appetite for the Indonesian credit and the robustness and depth of the Sukuk market. One last mention on the distribution table is that the Asia stats appear to be lower than what we normally see in an Asian US dollar transaction, but as this excludes Indonesia and Malaysia, investors are also predominantly Sharia based, are grouped under Islamic investors. If I can move along to the next slide, the next few slides shows the analysis of the Republic of Indonesia's green bond and green Sukuk framework. On slide 3, the Republic of Indonesia has developed a green bond and green Sukuk framework, and this is aligned with ICMA's green bond principles and the ASEAN green bond principles. And this is to finance or refinance eligible projects via the issuance of green bonds and green Sukuk. And this is consistent with the 4 pillars of the green bond principles, and the framework focuses on the 4 components below. My colleagues, Tariq and Dr. Yasir has also explained this in their previous presentation. So I'll just take you through briefly on this. So the use of proceeds here, with relevant to the case study, the proceeds of each of the green bond or green Sukuk will be used exclusively in the form of budget allocation, subsidies, projects for new financing or refinancing of eligible green projects. The second pillar, which is the process of evaluation and selection. Here, the National Development Planning Agency and the Ministry of Finance will review and approve projects' budget allocation, subsidies to be included in the state budget. Moving along to the third pillar is the management of proceeds. The Ministry of Finance shall manage the allocation process and within the government's general account in accordance with sound and prudent treasury management. And last of the pillar is reporting. The Ministry of Finance will prepare and establish an annual report, and initially on the date falling no more than 1 year of the inaugural green bond or green Sukuk issuance. If I can move along to slide 4. Under the first pillar, which is the use of proceeds, these are the eligible sectors identified that has met the criteria of Republic of Indonesia's green framework. The sectors below are very similar to what has been presented by the previous two speakers. So it covers renewable energy, sustainable management, natural resources, resilience to climate change for highly vulnerable areas and sectors or disaster risk reduction, sustainable transport, clean technology usage for power plant, waste to energy and waste management, green tourism, green buildings, and sustainable agriculture. Slide 5. The next slide, please. Okay, slide 5 covers the second pillar, which is the project evaluation and selection, where the budget tagging process was created to identify green projects. And the flow on the slide shows the budget tagging for climate change on the planning and budgeting cycles. And here, the process flows involves very detailed assessment of climate benefits of projects undertaking by live ministries based on key performance indicators and the project outputs. Republic of Indonesia's Ministry of Finance will maintain notes and records of all eligible green projects reviewed and to be funded by the proceeds of the green sukuk or the green bond. The last slide, slide 6, please, covers the last two pillars, and this includes the management of proceeds and reporting. Under the management of proceeds, Ministry of Finance will manage their allocation process of each green sukuk and green bond, and within the government's general account, and this is accordance again with the sound and prudent treasury management policy. Here, proceeds will be credited to designated accounts of the relevant ministries, whether it's financing or refinancing of eligible green projects. The next step would be the respective line ministries utilizing the proceeds will be monitoring and tracking and report back to the MOF the environmental benefits of the eligible green projects in their portfolio. And then the next step will cover the allocation register. And here, this will be registered to record the allocation of each green bond or green sukuk with specific details of the green bond and sukuk and a list of eligible green projects. And information here will include the summary of the project details, amount of proceeds allocated per project on the eligible projects, expected climate and or environmental impact of the projects, and the remaining balance of any unallocated proceeds. In the case of asset divestment, Republic of Indonesia will mark the net proceeds as unallocated until it's used to refinance another eligible green project. And as for the reporting, Republic of Indonesia will prepare and publish an annual report. And this report will be at minimum include a list of brief description of the projects to which the green bond or green sukuk proceeds have been allocated to, the amount allocated to such projects from the green sukuk and bond proceeds, and an estimated benefits arising from the implementation of the eligible green projects. This report is also available and published at MOF's website. And before I close, it is highly recommended that issuers appoint an external review provider. This also has been mentioned by my previous two colleagues. And this is over and above transparency, it confirms an alignment of the sukuk or bond with the 4 pillars of the green bond principles. Here, Republic of Indonesia engaged Cicero for a second party opinion and received a medium green shading for its debut green sukuk, based on the overall assessment of the activities that will be financed and the governance of their green framework. And that itself concludes my presentation for today. Thank you.
Thank you, Lisa. Ladies and gentlemen, next up we have a panel session. If you'd like to ask any questions during the panel session, please click on the Q&A icon that you see at the bottom of your screen and type in your question and the moderator will be able to view them. I'd now like to introduce your moderator, Zalina Shamsuddin, General Manager, Capital Markets Malaysia. And joining Zalina on this panel are Dino Kronfall, Chief Investment Officer, Global Sukuk and MENA Fixed Income from Franklin Templeton, Tengku Arif Azhar, Head of Debt Capital Markets for Maybank Investment Bank, and Dr. Daud Bakar, Chairman of the Amani Group. Zalina, over to you.
Thank you, Navina. Good afternoon, everyone. Good afternoon, Dr. Zamir. Good afternoon, Dr. Islan. I'd like to just mention, before we go on to engage with the panelists, I'd like to mention that we did have a fourth panelist, Mr. Pramod Das. He was the CEO of RAM Sustainability, and I'm afraid he couldn't join us today. So you've left with the three panelists and myself to take you in through the next hour on the bigger issues of green Sukuk issuance in terms of the investor appetite and the challenges with issuance, and what are the issues that one needs to look at. Now, before we start into the questions and answers, can I please invite the three panelists to say a few words? Can I start with Dino, please?
Yes, hi. Good afternoon or good morning, everyone. I'm here, I suppose, representing the investment or investor community. I work for Franklin Templeton Investments as the Chief Investment Officer for our global Sukuk strategy. Franklin Templeton is one of the 6 largest independent asset managers in the world, operating out of 35 countries, and has always emphasized global investing, sourcing local ideas or local investment opportunities, and has long recognized that clients want to invest in a manner that is consistent with their value system. And so we have, over the past few decades, been consistently investing in all things related to socially responsible investing, Sharia compliant investing, and ESG investing more recently. And it's a real pleasure to be with you here on the panel today.
Thank you, Dino. Dr. Daud, are you there?
Yeah. Thank you very much, Zalina. Bismillahirrahmanirrahim. Yeah, basically, I'm a Sharia scholar by training and by profession. I have been looking into Sharia issues pertaining to not only to create sustainable products from the Sharia compliance side, but also to create new products to bring the industry forward to the future. And the topic of SDG, ESG, and PRI, and many other permutation of those themes of the world will be very much interesting from the Sharia perspective, because as you know, Sharia has been revealed to sustain, to develop, and to sustain the welfare of the human being and the ecosystem of human beings. So yeah, I mean, I'm a Sharia advisor for both regulator and the regulatee, if you like, in some market and jurisdiction. Look forward to speak up and to share my thought on a few issues and themes which are relevant to our topic today, the topic of, Sukuk of sustainability, bringing us to the future. Thank you.
Thank you so much, Dr. Daud. Tengku Arif.
Assalamualaikum warahmatullahi wabarakatuh. I'm Tengku Arif, and as mentioned by Zalina, I'm attached with Maybank Investment Bank Berhad, and we are the local investment banking arm of the Maybank Group, and I head the Malaysian business for debt capital markets. And the sustainability issue is something that is very close to the Maybank Group. As you know, we run along the line of humanizing financial services. So it's something that is very core to our beliefs, and we've always, looking to be in the forefront in pushing the sustainability issue ever since, it was introduced here in Malaysia back 5-6 years ago when SC first implemented SRI framework. So I hope to bring my experience here, as you know, I'm from the arranger side, supply side, sharing our experiences that we've seen over the years to everyone.
Thank you so much, Arif. Okay, gentlemen, let's start the conversation. I'm going to pass the first question to Dino. Dino, we saw the equity market sort of tremendously react to the COVID pandemic early in the year. And but we also realized that the more sustainable companies did not react as negatively as the rest of the market. The ESG funds did better than the conservative or normal funds that are out there. Based on Franklin Templeton's investment ideology, what weighted ESG considerations given to the general investment decisions that you make?
So thank you. You're beginning with a pretty difficult question for us to address. But my observation is that the overarching observation is that the global Sukuk market, generally speaking, managed the initial impact or the drawdown of the virus fairly well. I mean, obviously, the Sukuk market declined, but it declined, about 30% of the decline of high yield, 35% of the decline of emerging markets, and I think less than 60% of the decline of IG. So it was certainly quite resilient, and this is in large part due to the fact that Islamic financial institutions continue to really anchor and support the global Sukuk markets. In terms of which types of companies, generally speaking, managed the impact of the virus and the financial fallout of it, here it wasn't so much really what sector. It was more what type of issuer it was. So high grade or high quality issuers and sovereign issuers, generally speaking, performed better than higher yielding or independent issuers. And this is in large part, I think, to the market's perception of their ability to survive what was at that point a very uncertain time frame and an uncertain impact from the virus. And so I think the lesson really learned is that things like the virus or impacts from climate, etc., really have a lot to do with managing a Sukuk portfolio's tail risk or the unforeseen but potentially very large impact that can come. And so from our perspective, the way we look at these tail risks is trying as much as possible to incorporate sophisticated Sharia-compliant risk management tools, trying to make sure that when we take on positions, we have reasonable amounts of risk attached to it. And then, as you mentioned, incorporate all sorts of ESG-related risk factors and data points into our credit analysis. And this is a very long-winded way to say that ESG factors are very much part and parcel of our normal credit work. So yes, we apply a lot of financial metrics in our creditworthiness assessment, but ESG factors are very much part of that investment decision. The problem with assigning a weight to it is that the reality is when companies are very strong and very highly rated and appear to be very robust, or don't seem to be particularly exposed to a large amount of ESG-related risk factors, so the risk exposures are not very high, we tend to assign a lower weight. However, when we feel that companies may not have all the financial resources or have very high amounts of risk exposure, then we have to very carefully assess, and we put a lot of weight on their ability to manage those ESG-related risks. So I guess what I'm trying to say is any ESG analysis will have two components. One is the amount of ESG risk exposure, and then the second one is the manager's ability to manage those risks. And we have to be cognizant of both. And I'm of the view that the ability of management to address or manage those risk exposures is by far the most important criteria we look at. And they tend to be very positively correlated with governance and good financial metrics. So I hope I answered your question there.
Yes, you did in a way, and I'm going to sort of give you another difficult question. Sorry about that. We've engaged with investors and issuers in the last few years. The resounding thing that issuers tend to say is, or investors tend to sort of circle back to, is the fact that credit risk is the most important risk, right? And so if credit risk is the big thing, how much does ESG are taken into consideration? Or is the underlying thing is the credit? If the issuer's credit is not as strong as you would like, does it matter no matter how green or how sustainable their projects are? It still falls back to credit rating.
No, so I mean, for example, our approach is not to be dogmatic about risk or ratings or strength. We're actually much more focused on making sure that we recognize the risk and then get paid for it. So there is always going to be a room for low risk sukuk as well as high risk sukuk. I think the challenge really from our perspective is just to recognize those risks and make sure that we are getting compensated for it. And in fact, Sharia compliant finance, wants you to take risk. There is this very important concept of risk sharing, and we are certainly, seeking risk, but we just want to get paid for it. And so I think that's the first, important differentiation, to be made. Now, naturally, some clients want you to avoid certain risks, and you have to respect that. But for more unconstrained portfolios, we are seeking risk. And in fact, today, I would say that the global Sukuk market needs more issues, needs more diversification, needs more project financing. And so everything that we've heard from the earlier speakers about trying to promote green and sustainable issues and project finance, this is all very good news for the industry, because all those transactions, I feel, will be met with very good demand, because ultimately, if the project or the issuer, is conscious about the environment, about social issues, about governance issues, usually it's associated with good risk control, good financial policies, and so therefore better, better risk ultimately.
Okay, thank you. From a point of view of an Islamic scholar, I think I would like you to get your views on the alignment between Islamic finance, sustainable and responsible investments. I think this has been a topic that has been discussed and has been in the air for the last few years. The general acceptance is there is alignment. If you could just share some insights into the alignment and a little bit more details, please.
Okay, thank you very much, Zalina, for the opportunity, and I have the pleasure to say a few words about the alignment between Sharia and the sustainability. And I have to be honest and open about this topic, because the theme of sustainability, or SDG in particular, has not been quite well accepted by some of the segment of Muslim community, the scholars and the masses, not because SDG is not good or it's not good enough, if you like, but because the awareness was not made available to them in their discussion, in their board meetings, and so on and so forth. I was referring to a period of 3 to 4 years ago, but slowly the SDGs and the other team of sustainability came into the circle of discussion, and scholars tend to pick up the issue, tend to look into the Sharia, if you like, dimension of it, try to Shariatize the SDGs, and to give the Sharia flavor as a cover-up of the SDG by putting the maqasid al-Sharia. We have seen nowadays, alhamdulillah, that some scholars have even said 27 SDG goals are Sharia compliant or Sharia maqasid, but we have to add on. So the whole idea of adding on to the SDG is a good exercise from the academic point of view, as if everyone is being excited to push this further. So from that perspective, it's a slow motion kind of journey, but the journey has been picking up in the last few months or few years. We have seen some sukuk issue here and there, but the scholars and the masses in particular still need some education to understand the whole processes that the great scholars, the great speaker have been saying just now, from Dr. Zami Iqbal, from Dr. Izlan, and Tariq, and many other speakers and colleagues have been saying. And this is a good manifestation to show that Sharia is always relevant, is always evergreen to support evergreen and everlasting agenda for the humanity and for the world at large.
Thank you so much, Dr. Daud. So Arif, that brings me to you. So Dr. Daud sort of suggested, and based on our experience, I echo his sentiments. I think the biggest issue that has been with regard to the issuance of green sukuk has been lack of awareness, right? But let me put it to you as an investment banker, based on your experience with issuers, there has been so much done to create awareness around climate change issues. There have been so many discussions, so many papers, regulators have come out with it, there have been industrial associations talking about it. But despite all this knowledge sharing and discussions going on, you yourself can see that the number of green sukuk issuances have been very small to date. And why do you think that is so?
Yeah.
Well, I think.
Sorry.
It's a question to me, Zalina.
Sorry, I'll ask Arif first, and then I'll come back to you, Dr. Daud.
Thank you. Sorry about that.
No worries.
No worries, no worries. So Zalina, thanks for the question. I think you're right. I think if you look at it from the ASEAN angle, I think there has been growth in green sukuk issuances. Give some data. Back in 2018, there were close to $4 billion US, and last year I think it went up to slightly more than 8 billion. But over here in Malaysia, my perspective is in Malaysia, given that I look at the Malaysian business here in Malaysia. What we have seen is that our green sukuk issuances has been between about 1 billion to 2 billion ringgit, ever since in the last 3 years. And this makes up about 1 or 2% of the total sukuk issuances, or rather sukuk and bond issuances here in Malaysia. So you are right that despite that there is a lot of awareness, there is a lot of seminars, webinars, talking, and it's a global awareness, as you know. It's not only about Malaysia, right? This issue about SDG is a global issue, and it's a big issue as well in the presidential election in the US as well, right? So, but here in Malaysia, there is still a lot of, it's still nascent, as people say, right? We mentioned earlier, it's still very small. And why is that? So, in explaining what we have seen here in Malaysia, we can look at it from two perspectives. We have to look at it from the angle of the issuer themselves, as well as from the investment community. And what we found out is that whenever we go out there, you notice in Malaysia, a lot of the green sukuk comes from almost 50%, or slightly more than 50%. The green sukuk issuances in the last 3 years has been from renewable energy projects. It fits nicely into the ESG theme, simply because it contributes positively towards climate change. And so the decision to make a decision whether or not to proceed with just a plain vanilla sukuk without the ESG theme tag to it, or doing an ESG, spending a bit more time in doing ESG sukuk for renewable energy is quite easy. Often the sponsor will agree to just do an ESG because it does fit nicely. But if you go outside, and if you add in that in Malaysia, you notice that there's, apart from the renewable energy RE, which is a solar and hydro, the rest are mostly green building index. Again, it's along the same line as green. But if you go beyond that, you notice that it tapers off. And simply because, so a lot of our companies are corporates in Malaysia, they would have to see whether or not it fits, or whether or not, you can meet the utilization proceeds, which is one of the tenets, isn't it, of ESG, making sure that it goes into the right, proper business segments, able to meet the criteria of ESG. And this is where there is that lack of awareness, I guess. And there's a lot of explanation, education, sharing of knowledge that we have to do with issues out there. And even after we've been able to convince them that it is something that they can do within the boundaries of the companies and align with the ESG framework, right? ESG criteria. Even if they've managed to overcome that and agree, the next question they always ask is, what is it in for me? What is the benefits in for me? So this is where the tangible benefits comes in. And every time issues go out to the market, the first thing they'll be asking is, I need to get the best pricing ever, right? Every issue thinks that they are credit wise they're the best and they want to get the best pricing. And unfortunately here in Malaysia, because of the small market, as you can see, right, 1 to 2%, like I mentioned earlier, there is no difference in terms of pricing between a normal Sukuk and ESG theme Sukuk at the moment. And so there is no major difference that would then tilt their mindset and say that let's go for the ESG Sukuk because I can save 5 to 10 basis points. Unfortunately, in Malaysia, we have not come to that stage yet. And the reason I think is more of a chicken and egg situation, I do believe. So that's the issue, always asking those questions. Ultimately, as a corporate treasurer, they always want to make sure that I get the best pricing first. Now, if at the same time I can do ESG, all the more better. But if I can't, then probably you say I'll just stick to a normal because I don't have to spend time, I don't have to spend money and whatnot. From the investment community, I think you will notice that we don't have a specific ESG fund managers. A lot of it, as I understand, is about a lot of it are equity based, not a lot of fixed income. In fact, it's very small. And there's no dedicated SRI fund or ESG fund. And I think the reason why I say it's a chicken and egg situation is because if they were to aggressively establish an SRI fund, then there's a lack of supply of papers, as you say. And there's a lack of supply of papers, therefore they won't be able to meet that requirement of them. It won't be successful. So there is less, motivation then to be able to do a dedicated ESG fund. And this is how it is, I guess. So I think what you need to do is just, we have to take a lead from what we have done in Islamic finance 2 decades ago, right? When we first started going out to the market and telling companies that, look, what do you consider from conventional financing to Islamic financing? Nobody had heard, right? Because it was very nascent at the point in time in the early 2000s. But slowly and surely, I think over time, as more and more investors are comfortable to buy into Sukuk, and they were more, and because there's a mass there, critical mass from investors, then companies also decided that, I don't mind spending because there will be that critical mass we've been saying. So we do need to find that equilibrium at the moment, and we are still growing at the moment, unfortunately.
Okay, thank you, Tengku Arif. Dr. Daud, would you like to give a few words on this point?
Not really, sorry.
Okay. Yeah. Okay, Dino, this puts you in the hot seat.
Yeah, I thought it was very interesting.
For all of this.
I thought it was very interesting, and I think they made, my colleague made some great points, but I think it's a matter of perspectives and how we look at this. If you look at, the global green bond market, for example, we looked at data earlier and we said out of 1.6 trillion in global bond issuance, you have today 200 billion of green bond issuance. So that's a 12%, share, if you want, of the issuance. And there is no real green benefit yet in the market. Maybe this may materialize down the line. But the pricing is not the primary objective of a lot of these green issues, and this is where I think when we look at Sukuk issuers or issuers from the GCC or Malaysia, it's a question of the priorities. I think of the management team, how much you get today versus planning or investing, so to speak, for the future. I also think it's not just a question of awareness, but I think it's also a misconception. I think in general, Sukuk issuers or participants in Islamic finance in general feel that because they are Sharia compliant, they're already doing quite a bit of good for the market and society and the way they do business. And I think they also feel that Sharia compliant by definition means it scores very highly on ESG. But as we now understand with all these new taxonomies and all the different metrics that you need to look at, just being Sharia compliant on its own does not necessarily mean you are being green or sustainable or meeting any of these other goals. And so that misconception, I think, is also an issue. So short-term versus long-term, this misconception are some things we have to just be honest about and confront. And I would probably say the silver lining or the good news is that 80% of Sukuk issuance today is still sovereign and financials, which are heavily regulated, or the sovereign or policymakers can have a very large influence on. And so I think with some good policy and just some incentives and just a little bit of an effort, I think we can both promote Sukuk projects and I think more sustainable financing. So the battle is not lost. I think we can certainly accelerate, because I would agree with you that less than $1 billion this year out of 50 billion in issuance is not where the Sukuk market really should be at the moment.
Yep, that's right. So I'd like to ask your views on what Dino said about that it's not enough to just be Sharia compliant. In your opinion, what other innovation that should come and play to make green sukuks or green financial instruments a more viable option to fund ESG projects?
Yeah, I think well said just now by Dino. I think before we go to Sukuk, we might have the same problem. I mean, the problem is inverted comma of the stock screening, for example. We are still doing the stock screening based on the negative list of screening. We exclude the scene sector from liquor, entertainment, and interest, and what have you. But we have not incorporated the positive screening to reflect the Sharia compliant plus. The plus is still missing at the moment, and the SDG Sukuk and what have you, the green, is coming within that problem, that dilemma. I would agree with Dino that some of the stakeholders are still confused, are still not aware that SDG is a different ball game altogether. It helped to bring another set of values, set of great benefit to human being from different perspective, rather than from scene-based perspective, from the benefit to the human being and to sustain the world and to sustain the ecosystem of the people, from the affordability of the houses to employment opportunities, to recycle the waste into energy. And these are new themes in the Sharia textbook, if I can say that. So the textbook should be rewritten, for the lack of a better word. The textbook should be represented. And in fact, if I can propose to some other stakeholders in this group and beyond, that we need to work hard to create a new Sharia standard by IOF on the SDG, because that will open up so many things. We have done our best on the Sukuk, on the share screening, even on the governance, Ma'ayar al-Dabt al-Shar'i, even on the gold product as a very interesting product, which is niche in character. So perhaps the time has come for the Sharia scholar fraternity to bring this further, even to the level of Sharia standard, either IOF or in respective jurisdiction like Malaysia, Bahrain, UAE, Saudi Arabia, so that it become very much entrenched in the whole Islamic financial engineering. So without doing this, we are going to see a very slow kind of acceptance, if you like, not because of the issue of non-compliant, the issue of non-familiarization of the importance of this new team. In addition to Sharia compliant, we need to propose, we need to put the motion strongly enough, no or never on Sharia plus kind of methodology. Thank you, Zalina.
Thank you, Dr. Daud. On that note, Dr. Daud, when you're issuing a green Sukuk or a sustainable Sukuk, what role does a Sharia advisory play? Is it purely from a structuring point of view, or is there an add-on from a Sharia point of view in terms of the greenness or the sustainability currently in the current practice?
Well, interestingly, I do have very hard and fast answer to this. In fact, Tariq mentioned just now that at the moment, fortunately or unfortunately, that the Sukuk, the green Sukuk, is being defined from the proceed utilization perspective and not from the very structure point of view. Perhaps Dino can comment a bit later, and many other colleagues can comment, because we have seen even for project financing, we are not using the project financing contract. We are still using the plain vanilla murabaha and ijara istisna, just not even istisna, sorry, just a murabaha community-based transaction to support the project financing requirement. The same goes to green Sukuk, because scholars are being invited to vet through the Sharia compliancy part of the whole Sukuk. And most often than not, most of the Sukuk we have heard just now, from IDB all the way to Indonesian Sukuk, very much based on the wakala supported by either ijara or murabaha, or a combination, a hybrid between murabaha and the mudarabah asset, or the project asset of the whole venture. So we have not seen, and by doing this, we are not doing something new to the structure. Not bad, but the function of Sharia still will be the plain vanilla, as he is doing endorsement on the other similar Sukuk other than the green Sukuk. So perhaps, if I can say, with the open-minded kind of perspective, perhaps we have to take the challenge to start looking into a new structure which is very much embedded with or driven by the Sukuk, the green asset, which Tariq mentioned just now. At the moment, we don't touch on the green asset as the underlying asset, but perhaps the time will come, and that will make the whole thing more exciting for the scholars, for the stakeholders, lawyers, the investment banker, the rating agency, to look from the word go that we are using carbon credit, for example, or the projects to be installed for the wind power or for the waste to energy, and how could we use that as the underlying asset for Sukuk, for green Sukuk. And that would be a distinction line between a normal Sukuk and, for me, from my perspective, a green Sukuk from Sharia perspective, where we securitize the green asset for the sake of green projects in the whole value chain of the transaction.
Okay, that sounds very exciting, Dr. Thank you. Next question is to Tengku Arif. We have a question from the audience. Arif, one of the questions is with regard to electric vehicle infrastructure, sustainable transportation. Is this something that the green Sukuk structure could be used to fund, based on your experience?
Yes, I think personally, my opinion, yes, although I've not seen it in Malaysia, but anything that contributes to the positive of climate change, I think can be used for a green Sukuk. In fact, it can also be used for sustainable Sukuk, isn't it? Because it also solves both the problem of climate as well as problem of social, where it's more public transportation, right? So it can be used when it comes to electric vehicle transportation. The question is whether or not, as we all know, that it's not, when it comes to the credit market, the fixed income market, whether or not, we are able to, credit-wise, whether or not we are able to sell the credit to the market, whether or not the investment community is comfortable with such a project, and whether it's doable or saleable out there. But using the green Sukuk framework definitely works, I think, when it comes to that.
Okay, great. We have another question from the audience, and I'm going to sort of change the question a little bit for you, Tengku Arif. Based on your previous experiences in all the green Sukuks that you've been involved in, be it the sovereign or the corporate, if you look at the investor demographics, I think Lisa gave us a good sort of outline in terms of the type of institutions and stuff like that. What I'd like you to share with me is what percentage of the investors were actually sustainable or green investors based on your experience, or were they just the normal investors that were looking at credit?
Right. I think that I mentioned earlier, I don't think we have a big investment community where from a fund manager at least, where there's a dedicated ESG or SRI fund here in Malaysia. Because again, there's only one, I believe, of the 8 that we have, and the rest are almost the equity. So it's very small, actually. And so, the investor community here in Malaysia, when it comes to ringgit Sukuk, mostly the same that will go and subscribe or invest in your plain vanilla Sukuk as well. But having said that, I think we all know that there are certain investors here in Malaysia, for instance, EPF and QUAP, where they are signatories to the PRI or Khazanah as well, where they will make sure, while they don't have a specific mandate for that matter, but at least they do have a criteria that they need to meet, given that they are signatories to the PRI, making sure that they've gone through the risk and the criteria of ESG before making any investment decision when it comes to subscribing to a certain Sukuk. And I think similarly, for, as you know, our market is very, very, very deep, and there's breadth in it as well. We have the insurance and takaful operators as well, and fund managers have mentioned, where some of these are part of a bigger MNCs, right? Where they would have from their parent company making sure that they will go through the ESG criteria before making any investment making decision. So in a way, they are already running that, making sure that it ticks the boxes before they go down and make that final decision whether or not to invest in certain Sukuk.
Okay, so that sort of nicely ties me back to you, look, the reality is, right, whenever an issuer enters the capital market, pricing is important. Pricing is critical. Now, you've mentioned that you've looked at the various evaluations, you've looked at the various parameters before investment decisions are made. And you've also suggested that, there should be incentives to grow this industry and stuff. But at the end of the day, it's a carrot and stick sort of situation. I'm only going to issue a green if it's worth my time. I mean, both Tariq and Lisa have shown how difficult or the extra steps you need to go to issue a green. Now, if investors like yourself, institutional investors, don't take the first step and be the carrot and provide a more reasonable pricing for those who issue green, do you think there'll be who's going to move the needle here? And it looks like this is on you guys.
So I find it amazing that companies are talking about pricing when we are in a zero interest rate environment, right? I mean, pricing has never been more competitive for companies than it has been over the last few years. So I don't find that as a credible excuse, first, just in the beginning. Second, I would say, like many signatories of the PRI, and as Sharia-compliant investors who want to see green Sukuk in the market, we're fine, investing and maybe even suffering a few basis points to support the development of this market. And almost all the issues that were mentioned in the panels and in the previous discussions we participated in, to support the market, and because they were done well, and the issuers are all very high quality. We also want to build our credentials as ASG focused investors. But this is where we get into short term versus long term. I mean, if a management team, frankly, has the view that I'm only going to issue if I save 5 basis points, if it's worth my time, that to me is someone, what the industry calls greenwashing, someone who's just doing it for marketing or gimmicks and is not really thinking about it strategically and sustainably and over the long term. And so from my perspective, the biggest advantage of investing in management teams that do take climate change and sustainable issues seriously is that they are likely to avoid tail events, or they will not cost me too much money 5 years down the road or 10 years down the road. When they have that type of an attitude, I find that to be quite transactional, quite short term, and doesn't give you the comfort that they're really thinking about these ESG matters seriously. And so it works to their disadvantage. The way we also look at pricing is that today, it may be the case that there's no real big difference between green and normal Sukuk or bonds. But in 3 years or in 5 years or in 10 years, as more and more people, A, articulate what their needs are, and B, start demanding only, or start putting more and more money, for green, or start avoiding non-green, so to speak, or unsustainable, the costs will therefore rise. And so therefore I'm incentivized now to avoid companies that may be shunned or may have less demand for their securities in 3 or 5 years because they're not paying particular attention. So again, it's really a question of short-term versus long-term incentives. And good management teams that want to do the right thing, that do care about the planet, their employees, and their stakeholders will have, I think, a much more serious approach rather than a transactional, very short-term approach.
Thanks, Dino. So I think that's a great point that you made. I think the reality is it's not the investor's responsibility, but it's all our responsibilities. The intermediaries play a role, investors play a role, and so do issuers as well. Now, I'm just going to shift the conversation a little bit to more how Sukuk issuances could be used to sort of support social issues. Dr. Daud, could you tell us a little bit about how the role of Waqaf and how innovation and the use of Waqaf could be used to help in social, using the Sukuk instrument to address social issues?
Thank you for that important and interesting question about Waqaf. As much as everyone like Waqaf, but we have two challenges as far as Waqaf is concerned. The first challenge is about the ability to look into Waqaf as a social phenomenon. Waqaf is not meant to be fixed. Waqaf is meant to solve the problem of the day, of the hour. The first Waqaf was created in Medina because the lack or the shortage of water, drinking water, and Sayyidina Osman has used his own money and purchased the well and make it Waqafable to the citizen of Medina, both Muslim and non-Muslim. So it is the need of the day. So nowadays we need to change that mindset, that Waqaf should be aligned towards solving the problem of the day: education, scholarship. In fact, nowadays the online training, the data plan for the student who are not able to come to the campus. So and so on and so forth. So we need to challenge first the very understanding of the Waqaf. The Waqaf is to benefit the recipients of the hour. The second element is the financial engineering. When we put in together the Sukuk, for example, I was involved in the first Sukuk on Waqaf in Singapore. The first two Sukuk were to very extraordinary to dispose of the Waqaf asset and to bring back one, cash together with the leverage of Sukuk to build a 5-star resident, civic resident in the heart city of Singapore, because the income, the cash flow is much better than the normal, unproductive Waqaf asset throughout Singapore. So that was the need of the day. In fact, nowadays we talk about the social welfare. We are faced with the problem of education. Education is meant to be inclusive, which is not possible now because of the COVID-19. The only way to make it possible is through, online. So how can we Waqafy the learning process altogether? Number two, the employability among the people, the SME. We have heard how the Jack Ma and his group has been able for the last how many years to lease out their technology, fintech, be it blockchain, be it a core banking system, and what have you, for the small SME in China and beyond to use the system free of charge, where they share their revenue at the end of the day, and they're going to IPO in the next few weeks or days, the largest IPO in the history after Aramco. So we see all these things. We have to restructure our Waqaf and Sukuk to benefit the mostly needed requirement of the, if you like, the nation at the moment. And surely every respective society from from Middle East all the way to the Far East. We have so many requirements in the society. I would not be taking longer time than this just to say that it has the potential. We can bring the Sukuk onto the Wakaf, but the Wakaf should be reformed, and the Sukuk structure should be reformed as well to make sure that it behaves well to suit the current needs of the time.
Okay.
Thank you.
Thank you, Dr. So Tengku Arif, let me get back to the nuts and bolts. The cost of issuing a green Sukuk. What would be the additional cost in terms of percentage? What are the transactions or the additional elements that need to be included that will increase the cost of issuing a green or SRI Sukuk relatively to a normal Sukuk?
Yeah, I think it's been mentioned just now that, whenever it comes to ESG or green Sukuk or sustainable Sukuk, the second opinion from a third-party assessors is quite highly recommended to give it the credibility, right? You want someone to give that stamping, saying that, this is in line with the principles out there. And that will cost for any issuers who want to embark on a ESG or a green Sukuk. And that would be an additional cost aside from your typical other costs that which they are already inclined to pay, as you can see, if you were to do a Sukuk.
Okay. And could you sort of, I'm not sure whether this is a fair question to ask you, could you sort of give a percentage in terms of how much that additional cost is? It like 30% more than the normal cost of issuance, or is it 5%? Or?
I would say it's manageable.
Okay.
It's not something out of this world. I don't think so. But, and we've got plenty of those out there doing this type of work, isn't it? You've got Cicero that has been going around Sustainalytics. And in Malaysia itself as well, we do have the two local rating agencies. Unfortunately, Dr. Pramod couldn't be here, but he would be able to say a bit more about this. But they also provide this type of services in terms of assessing, providing the stamping and the gold standard, as you can see.
Okay.
That would be one. The other one is, I think, and this is more, I think, pertinent to those who do not have a sustainability framework within their own organization. It's much easier if you talk to an issuer that already has that, sustainability is part of their culture, and so they have their own framework. It's much easy. And they just run on the basis of framework, making sure that it's in line with the principles out there. However, not all issuers are like that. So whenever there are issuers who are interested, who have it at, who are able to proceed, you need them to do the ESG framework, and that's where sometimes they don't have the expertise in doing so. And there is one way of doing it is probably to get a consultant on board to advise them, assist them in drafting that framework, and that would cost as well. Okay. So those are two big costs I would imagine, additional costs that you would do if you were to go down the sustainable route.
Okay, I think that was very much answered the next question that I was going to ask you in terms of what is the advice you would have for corporates in evaluating an issuance? What is the first thing they should do? And I suppose you've already answered that, is come up with a sustainability framework, have a strategy, a plan in place on how sustainability fits into your short, medium, and long-term story. And then once you have that, then it's much easier to sort of figure out the projects, how to allocate proceeds, and how to manage that. Yes?
Correct. So you have that framework. We need to be able, it's all those four tenets that we've been talking about, making sure that they understand that there are responsibilities for them to make sure that it goes to the proper projects, it's been accounted for. There are criteria that how you choose those projects, and you need to monitor them and as well report them on an annual basis. It's just not about putting on paper and saying that, that I've issued a green Sukuk, I've issued a sustainable Sukuk. It's more than that. You need to have, in fact, companies should have a sustainable committee for that matter, certain person who should be looking on this ESG issue of framework, making sure that it's run to the T and properly done.
Okay, cool. Thank you so much, Tengku Arif. Dr. Daud, I have a question from the audience. Could you please give an explanation in terms of what is the difference between a sukuk and a wakaf?
Yeah, essentially, a sukuk is a financial instrument where the issuer of the sukuk will invite the funding from the investors, from the public or from the government, whoever they are, to contribute to the sukuk for a certain limited of time. Or perhaps it can be perpetual. We have the perpetual sukuk, but basically the money will be used to invest in certain projects. This is how the sukuk work and behave. As for the wakaf, it's about outright donation or outright charity. Unlike sukuk, when you put the money, you have the intention to get back some return. If not the return, perhaps the principal of your sukuk investment, depending on the category of the investors. But for the wakaf, from day one, from the word go, the wakafer or the founder of wakaf, the one who create the wakaf, who put the money, is not intending to get back any return, either the principal or the profit, and he is, fully putting his money off to help the society, and that project can be the same of sukuk, power plant, school, hospital. It could be similar or dissimilar, it doesn't matter, but the intention is to give his money outrightly for the sake of charity, and this is the whole meaning of wakaf. So how can we blend them together? We can have the sukuk, where the sukuk will be used to support the wakaf projects, but it can give some return to the sukuk holder. So we can marry the two of them. One is having the perpetuity in terms of the reward from Allah the Almighty, and the sukuk element will give some return to the sukuk investor investing in wakaf projects. Thank you.
Thank you, Dr. Daud. So we have about 8 minutes left, and I would like to end this time with rounding up with comments from each of you. So Dino, you're representing all the institutional investors globally. There's one thing that I would like to say to the potential issuers from the three regions we're talking to today, which is Middle East, the Asian continent, and also Africa. What would be your final?
We think that there's still quite a bit of work ahead of us to really to see the global sukuk market reach its potential. This is a $550 billion market today. We think it can be north of 2.5 trillion by 2030. But to get there, we need to accelerate the rate of growth. We need a little bit of support from policymakers. And I think in those efforts to go from where we are today to that 2.5 trillion, I think if we can have a big proportion of that be sustainable or green or affiliated with these SDG goals, I think it's going to be better for the investor, better for the countries or issuers, and obviously better for the globe. And so we are excited to be on this journey. And over a 10-year time frame, these are achievable numbers, and we should really try to get there.
Thank you so much, Dino. Dr. Daud, in your final comment, could I ask one question? Do you think that as we start innovating more in Islamic finance to incorporate more elements of what is commonly known for SDGs, do you think that Islamic finance will now be more utilized by conventional investors as well and conventional issuers? Do you foresee that in the future, and therefore that could lead on to the growth that Dino is talking about?
Yes, I think the answer will be yes, and we can leverage on this movement to speed up our, the locomotive of our industry moving forward. And this is the right time to share the same cake with the conventional ethical funding coming together to have common goal and objective. and before we come to that level, we have to look to our backyard, awareness, education, and if I can say over here, with all the honesty and openness that we need to do a lot of impact measurement, because the Sharia mind of the scholars and the Sharia fraternity, I'm referring to myself and the other colleagues of my fraternity, we are very much ignited by impact measurement. So the more you can show the impact from the Sukuk on the ground, from the school, hospital, power plant, and what have you. So the Sharia wave, the Sharia bandwidth will be becoming stronger and stronger, and that will change most of the things that we used to dream in the past. And before I end, I would like to thank the IDB, the ICD, the Securities Commission for having me on this panel with the great panelists and the great keynote speakers as well. And hope we can have a more fruitful discussion how to make this industry relevant, trendy, and futurist in our approach. Thank you.
Thank you so much, Dato'. Tengku Arif.
I think the word here is we have to persevere. I think we have to look at from Malaysian perspective, isn't it? We turned this capital market from conventional to Islamic over 20 years. Now we are considered a Sukuk market, and we have done it before. When we first started the PDS market way back in 2000, and now 20 years down the road, Malaysia is common. Sukuk is common, right? So and there was a lot of work done there, either from the support given by the government, by the SE, and we should take a lead from there, learn from there. We have already had that experience. We should be able to use that to push the ESG theme agenda. I think from the incentive purposes, it's already there, be it whether it's tax incentive or deductibility, at least for the Sukuk in ringgit. What we need now, as I started earlier on, my first question is having that supply. And I think there is a need, unfortunately, that government can play a central role here. I believe they've got whether from the angle of supply or demand, they have companies that go out to the Sukuk market and to tap regularly for infrastructure projects, and they could easily make sure that it's not only Sukuk Islamic based, but also making sure that if it fits into the ESG, we should turn it into ESG theme Sukuk. Similarly, we have all the government-linked investment companies and the GLICs out there. They are able to dedicate a fund to make sure that to push on the demand side as well, making sure that there's a difference. They will be able to move. It won't be easy. I think there are challenges, but given that we've experienced it before, like I mentioned, in turning our capital market into a Sukuk market, I think we can do so.
Okay, great. I think that's a great comment, final comment, Tengku Arif, and that's why IDB, ICD, and CMM are here, because we will work with the various governments and help them understand the importance of green issuances and hopefully help them in this journey. Well, gentlemen, that brings our time to the end of the 1 hour. It has been interesting engaging with all three of you. Thank you so much for your time. And I will now pass on to Navina, our MC for the day. Thank you very much.
Thank you.
Thank you, Zalina, Dino, Arif, and Dr. Daud. And now to wrap up, we are very pleased to welcome Mr. Aiman Sajini, Chief Executive Officer of the Islamic Corporation for the Development of the Private Sector, to deliver his closing remarks. Mr. Aiman, over to you.
Yes, thank you very much. Bismillah ar-Rahman ar-Rahim. Wassalatu wassalam ala Sayyidina Muhammad. Ladies and gentlemen, it's a great honor for me to be here and to conclude this very important concept of green sukuk. As you all know, that the population of the world, inshallah, by 2044 will reach, it's been estimated around 9 billion. And with that increase in the population, there is going to be more and more need for infrastructure, and especially power generating plants. And the more we focus into green power generating plants or infrastructure, the more we are going to be, inshallah, be able to make it a sustainable world for the humankind to be living in. And since 2000 or mid-2000, there is a new class of investors who have been entered to the market, which are targeting social responsible investments, which are SRIs. Since then, the assets under management have grown over $2 trillion in that sense. So the good thing is for the Green Sukuk is that not only you will be receiving the investors to come in and be interested in it, you'll be able to really fund a green project that is good and healthy for our world. But at the same time, and in most cases, you'll find the cost of funding be even lower, because most of those SRIs and investors are really keen to support this concept and really are believers how important it is for our world. And I have to say, Southeast Asia has taken the lead in the financing renewable energy projects via Green Sukuk. 7 pioneers and several pioneers transactions have been observed in Malaysia and Indonesia with great success. The Islamic Development Bank and ICD in particular, and the Security Commission of Malaysia will be great partners and really working together, inshallah, to further support this with our experience in our member countries in the issuance of the Sukuk, and with the great experience and guidance of the Commission, we will be able to, bismillah, make it flourish more and more, and really make it realize the size and the extent it should be in, inshallah. So Jazakumullah khair again, and I'm honored to be part of this discussion. Thank you.
Thank you very much, Mr. Sajini. Ladies and gentlemen, that brings us to the end of this webinar. I'd like to once again, on behalf of Capital Markets Malaysia and the Securities Commission, to thank the Islamic Development Bank and the ICD for collaborating with us on this webinar and future projects. Thank you to all of you for your time this evening, and I wish you a pleasant day ahead. Thank you.
Thank you. Bye-bye.
Thank you, everyone. Bye-bye.
Bye-bye.